All right, congratulations to making it to the last video on this bootcamp series of the playbook. We went over all the steps. Now we're on the last step, actually, executing on the 5 minute or 50 minute. We went over market direction, supply and demand zones, support and resistance levels, order blocks and balances, breakup structure and retest, liquidity, confirmation candles, time, and now the last video, we're going over execution on the 5 minute or 50 minute. We cover it a little bit on the last video. If you guys haven't seen the last videos, I highly recommend you guys start with the very first video with market direction and the videos after that, step by step, so that way you guys can get a better understanding. And also you guys are not confused. Do not jump ahead. Do not skip videos. Be intentional with this bootcamp. Be intentional with every single video and take notes. Rewatch the videos if you need to, and apply these rules, these principles, okay? Because this will help you and your trading journey, just like it helped me. Now let's go ahead and get this started. Now let's look at the seventh step, execution on either the 5 or 15 minute. Now we're going to be looking at examples here on both sells and buy orders. So we cover it on our previous call. We saw this sell order on at this last actually this happened last week on Thursday during New York session. Now we know when price was at, let's look at this section here on this sell, this downtrend here. We know that the overall market it's on a downtrend. So when you see a downtrend, just like we covered on the first step, we look at the 4 hour market direction. Just a quick recap, okay? We're going over every single step, just like so that way we can finish it off with the last step. Now we saw here the overall trend, it's on a downtrend because we have lower highs, lower lows, lower highs, and lower lows. So once you figure out the market direction, you're looking for sells. Now we're going from the 4 hour time frame to now the 1 hour time frame, going over the second step. Now the second step, we're going to identify our supply and demand zones. In this case, we're looking at supply, but because we're looking at a downtrend, we're looking at sales, so we're looking at supply zones and resistance levels. Now here, we saw the supply zone here because we have an imbalance. We have an order block here. Now, let's look at the 30 minute. The 30 minute, you can also see this order block on the 30 minute here on this bearish candle. See here, I took the zone from this wick, from the top wick to the bottom wick. And looking at the 50 minute, you can also see it clearly there. The 50 minute, from this candle to this candle. So that's how I drew my zone. And now that we figured out our supply zone on the sell, the next step now is break of structure and retest. Price broke below this structure. Price broke below. You see how price was supporting here. Price then broke below to retest for the continuation to the downside. And it came back up to retest again this zone. So when we see the break of structure, now you look at liquidity. Where is the money? Where is the money? Ask yourself, where is the money? Now we see liquidity here on this lower low, and then we see liquidity here. Now, if you're at this point in the market, you know that there's liquidity up here. You see here is liquidity because of these sell orders. And you have your zone here, and you have liquidity here. So now let's say this hasn't happened yet. This hasn't happened yet. So we're looking here. Currently, we're here. We're around this range. We're here. Price is currently here. It hasn't reached the zone yet. Now we're gonna wait. We're gonna be waiting for a liquidity sweep. So we wait for liquidity sweep to happen, and then we look for our confirmation candle, which is the next step. So now that we know that we have liquidity up here, we're gonna wait for our confirmation candle and also look at time at the same time. I'm gonna look at time at the same time. Get it? Confirmation candle time. Anyways, um, I gotta crack some jokes. Trading can be boring. By the way, trading can be boring. So if you don't learn how to have fun with it, then it's just gonna be you're gonna be devastated. But anyways, uh, you gotta learn how to have fun. Just loosen up. It's okay. Trading can be boring. You're looking at charts, you're looking at price, you can't react emotionally. But it's good to crack some jokes here and there. That's why I'm trying to make this fun. Have some sense of humor. But anyways, uh, we're looking at time, and then we're looking at the confirmation candle. And then this happened during New York Open at 6:30 Arizona time. And this is based on your local time, wherever you are, whether Eastern or Central. Here, it's Arizona time. So now that we have this, okay, we know that we have liquidity up here. We have liquidity up here, and price is going up to my zone. And we know that the overall trend is on a downtrend. So I'm looking at sales. So I'm going to embrace for some sales. I'm going to anticipate some sales here. Now I'm looking at the 15-minute time frame, and now I already have my risk to reward set up. I like to set up my sell position, my short position tool. I like to place it 50% within my zone. I like to place it in the middle of my zone. And then we have this Greystone Doji, this candlestick confirmation candle. So once we see this candle forming, now we enter for that sell. We enter for that sell, and to get a precise entry, you can also look at the 5 minute. We can look at the 5 minute, and you see price rejecting this area. You see these wicks here. Price is rejecting this area, pushing price down. And when you see this, okay, it's a potential sell execution. And then the 15-minute candle, it finished off with a doji. It ended up with as a doji candle. Now you can enter it here. As soon as you see this wick, you can enter there, boom, for a sell to the downside. This is a 1 to 5 risk to reward. As soon as that 6:30 hits, boom, that's when you enter. 6:30, you enter. Boom. You wanna enter right at the 6:30 mark. You do not hesitate. You want to enter right away because you know that it's within your zone. It touched your zone. Also, it took out this liquidity, and it's on a downtrend, and more than likely it's going to continue down. Now you want to set up your risk to reward. You already marked up. You already checked off the rest of the boxes. You got your 4-hour market direction. That's confirmation. It's on a downtrend. You have the supply zone. That's a confirmation. It's hitting your zone. You have the liquidity. It took out the liquidity. That's a confirmation. And now you have the confirmation candle that's forming. And then you have the time, right? You enter right at 6:30. So that checks it. So you enter for that sell, and look what happened. Boom. It continued to the downside. Now, if you hit your stop loss when you entered, don't worry. You have a second chance. Enter again. Try for a re-entry at that zone. If time permits, you re-enter again. for a sell. If you accidentally entered too early, cancel the order and re-enter for that trade again. Or if you enter a little bit too late, a second or a minute late or 2 minutes late, you can re-enter, right? Um, just just make sure that you guys are looking for that confirmation candle. And once you see it forming, once you see the confirmation candle forming, I'm looking at the 15-minute, you can see that it's forming that doji candle. So I know it's gonna finish off as a doji candle, and you're gonna enter for that sell without hesitation, right? So that's for a sell entry, right? Now let's look at a buy entry. Now I have a couple examples here. Here we're looking at the overall market. It's on an uptrend here because we have higher highs and higher lows, higher highs and higher highs. So overall, it's on an uptrend. Now let's look at the 1 hour. I located my demand zone here. This is my demand zone. Why? Because we have this order block here, this candle. So I took the zone from this wick to the bottom wick. And I took this this order block here, drew my zone out, and also this is a valid order block because it also liquidated here, right? These buyers and liquidated and you see the wick here, it liquidated here, broke a structure above, retest, boom. So that's a valid order block. I drew out my zone, and when price broke above structure, came back to retest the zone, and you could have placed your risk reward for a 1 to 3 here. You can either put it in the middle, at the top, or at the bottom. I like to either put it at the top or at the or hat or the at the halfway point of my zone. But in this case, it resulted at the top. Boom, you could enter there for a buy to the upside. And you know that you have liquidity here, right? This is liquidity. And you know when you have liquidity here, you know that the price is going to continue up to wipe out this liquidity. And then you have liquidity down here. Look at the 15-minute. Boom. So you see liquidity here. Up here. Here. So this happened during London session at 4 a.m. You could have entered for a buy there to the upside. So this buy order happened at during London session, and it came back. It broke above structure, came back to retest the zone for the buy to the upside. So that is another example of using the playbook. And also the confirmation candle, the 15-minute here for this buy. See here, this bullish engulfing candle. That's a plus. You see how there's bullish engulfing candles forming throughout the trade. When you see this bullish engulfing candle, there's another one here. It's a plus. It's a positive sign. When you see a continuation of confirmation candles, of bullish confirmation candles forming to the upside. So that's how you can manage your trade, as well as by you can manage your trade, and you can also see the continuation of the uptrend or downtrend by looking at these confirmation candles. So now let's look at another example for a buy here at a support level. You can see here the overall trend is to the upside. It's an uptrend because you have higher highs and higher lows. The overall trend is to the upside, so you want to trade with a trend. So you know that it's a uptrend. Now you're looking for buys. Now we're going to the 1 hour. We marked up our support levels, 33.45, 33.40. Now you see a break of structure here. It was once a resistance. Price broke above structure here and came back down to retest. So that's the confirmation. And now you're looking for liquidity. Liquidity is here and up here. Let's go down to the 50-minute. So you see liquidity here and up here. So price liquidated. These buyers came down to liquidate, formed a confirmation candle. There's a hammer. This bullish candlestick is a hammer. So that's a confirmation candle. It touched my zone there. It That wick touched the upper level. It touched right at 33.45. You see how precise it is? You have to, right at 15, this was during uh, New York session going into London, Tokyo session. This happened around the afternoon time. Right at 15, this is what, 13, 1, 2, 3. This is military time. So that is 3 o'clock, right? 3 o'clock, 3:15 Arizona time. Right at 3:15 Arizona time, 15:15 military time, it touched my support level at 33.45 for the continuation to the upside. And also it gave me this hammer, a bullish confirmation candle, and then it gave me another confirmation candle, which is the three white soldiers. When you have three bullish candlesticks in a row, that's another confirmation for a buy. And boom, look at that. Choo, it shot up for a 1 to 5 risk to reward. So you could have entered this on either 15 or 5-minute time frame. So that is, and I like to take it on the 15-minute typically because you can gather more data on the candlesticks. So here in this case, you got the hammer and you got the three white soldiers. So that's a double confirmation on the candlestick confirmations. And then we looked at the time right at the 15-minute mark and boom, executed on the 15-minute. So by implementing the strategy, and this works for any market, for any asset pair, and you just follow the same principles. And this is without using any indicators. This is pure price action, pure price action. And that's the power of training your eyes, of studying this, of catching this, these moves. And I walked with you guys step and I broke it down step by step. I walked with you guys here, showing you guys how to go step by step, using the playbook. So why the 5 or 15 minute for execution? Well, you look for precision on entries. Instead of entering blindly at the 4 hour or 1 hour zone, the 5 or 15 minute gives you a tighter confirmation, such as candlestick pattern, break instruction retest, liquidity grab. This allows you to catch moves with better accuracy. You also set up a smaller stop loss. The lower time frame entries, uh, it's a tighter stop loss placement, either 10 pips or 50 pips. I like to, especially for gold, I like to set it up at 50 pips. That equals to $5 below or above my entry. So 50 pips on gold is equivalent to $5, right? 50 pips, $5 on either above or below my entry point. It improves your risk to reward ratio significantly. And then also it's a confirmation of market reaction. On higher time frame, you see a zone. On lower time frame, on the 5 or either the 5 or 15 minute, you see how price reacts inside that zone. Just like I showed you guys here, how price reacted, in this sell example, how price reacted, inside this supply zone. It gave me this reaction here, this wick, and gave me this doji confirmation candle for the sell. So it was reacting around this sell, this supply zone. So on lower time frame, looking at the 15 minute here in this case, you see how price reacts inside that zone. Rejection wicks. This was a rejection wick. Either on rejection wicks, engulfing candles, breakout structure and retest, liquidity sweeps. It helps filter out fake breakouts. And last, scalability. It works for scalping, day trading, intraday, and even swing trading. You enter on 5 or 15 minute, but hold the trade according to your higher time frame bias. So we know that the overall time frame on this sell was a downtrend at the 4 hour, right? Looking at the higher time frame, the 4 hour, we saw that it's an overall downtrend. And now we scale it down to the 15 minute, and we're able to see, the scalability, the precision at a small time frame. So we enter on either the 5 or 15 minute, but hold the trade according to your higher time frame bias. So we know that the overall trend is on a downtrend. So we're going to look for sells and we're going to hold it. We're going to hold this sell according to the higher time frame, right? So higher time frame equals direction, right? Gives you the trend direction, gives you the structure, the overall structure of the market, gives you the trend direction on higher time frames. And then when you look on the lower time frames on the 5 or 15 minute, it gives you the execution. It gives you precise entry, smaller stops, bigger risk to reward. That's why many traders wait for higher time frame zones plus lower time frame confirmation before placing execution orders. I'm going to repeat that again. That's why many traders, especially professional traders, wait for a higher time frame zone. They look at the higher time frame for supply and demand zones and for market direction, right? We look at the overall market direction on the higher time frames, on the 4 hour time frame. And then on the 1 hour, we look at supply and demand zones, support and resistance levels. So we mark that up. And then we look at the 15 minute. So we look at the higher time frames for direction, right? For direction. And then we look at lower time frames for entries, for entries, for a sniper entry. So we look at the lower time frames for additional confirmations, for liquidity grabs, for break of structure, and for sniper entries to confirm our trades before executing any orders. Now that's the end of this video. That's the end of this bootcamp series. And I really enjoyed uh, going over this bootcamp series, breaking out the playbook And I'm telling you guys, you rewatch these videos over and over again. You apply the information, you take action, knowledge. Uh, they say knowledge is power, but apply knowledge is power. So applying the knowledge that you were taught here is power. If you learn this without taking actions, without taking action, you're not gonna see results. You're not gonna see progress. So it's very important to take action with this information and continue to take action and continue to practice. And it's all about repetition. Repetition, repetition, repetition is the mother of all skill. That's why I am where I am today, and I'm teaching you this because it's through repetition, it's through practice, it's through training my eyes, back testing, journaling down my trades, uh, really studying this information, really applying this blueprint. And if it can happen for me, it can happen for you as well. If you allow it to, unless you put the reps in, you gotta put the reps in, right? Just like you go to the gym, you put the reps, you gain some muscle. You have to go to the gym every day to gain muscle, to gain strength. Here in trading is the same. You gotta show up every day and you gotta put in the reps. You gotta practice. You gotta sharpen your axe and continue to study. So, um, but yeah, that's the end of this series. I really appreciate you guys for tuning in, for taking the time, for watching these videos, for studying, and I can't wait to hear all the testimonies, all the success that's going to be happening with you guys. And if you guys need any help or any one-on-one mentorship, I'm here. Reach out to me, schedule a call with me by clicking on the link in my description. I'll be more than happy to, have a one-on-one mentorship with you guys, have a private exclusive training going over the playbook and give you some extra gems that I won't cover in public. I have some inside information I'm willing to share. If only you guys schedule a call, if you guys are willing to set up a one-on-one call, I'll be more than happy to share some extra gems, some inside information, some elite uh, private information for you guys. But this is just, the introduction, surface level information. If you guys want to have direct access, have some, inside information, then schedule a call with me and we can shop it up. But anyways, I appreciate you guys again. Thank you guys so much for the support. I love you guys and stay tuned for more videos. I'll be creating more content. I'll be posting more videos when it comes down to trading and investing and just financial literacy. Um, it's going to be big. It's going to be very big, and I'm excited. And I'll be dropping more gems in the future, more value. Uh, but I really enjoy this bootcamp series, and I'm so grateful that I get to host this and use this platform to share the knowledge that I've learned throughout the years that has impacted me. And I know I can impact you and your family. So um, thank you guys. Thank you guys for taking the time for supporting, for learning, for showing up for yourself, for showing up for your success. And I can't wait to hear all the testimony that's going to be popping up. So God bless you guys. Until next time.